Get ready to get your questions answered by financial advisors. Learn how to put more money back in your pockets regardless of where you're starting your financial journey with your host, Hannah Mitria. I am so excited to have everyone listening to the U.S. Virtual Financial Advisor podcast, and I'm super excited to have Morgen Rochard, a CFA, CFP, and RLP, and she is the owner of the lead financial planner of her fee-only registered investment advisory firm, Origin Wealth Advisors, LLC. She's also a financial consultant at her firm, Money Owners, LLC, author of the Personal Financial Quick Start Guide, and the co-host of the Bitcoin for Advisors podcast. And we will be talking about Bitcoin today. So I'm super excited to have you on the show, and welcome.
Thanks so much for having me on, Hannah.
Yeah. And let's just get started with a little bit of your background before we jump into Bitcoin. So how did you get started in the whole world of financial advising and planning and things like that?
Yeah, so I was pre-med in college, so obviously that would mean I would become a financial advisor later on in life. Yeah, and then I actually I didn't like it. I had volunteered at a hospital, and it turns out I don't like it when people are coughing around me. I get kind of like a little bit of a germaphobe. Did not know that growing up. So that was really
this is an interesting time with the kids being sick.
Yeah. My kids are sick all the time. I feel like it's different when it's like your family's germs, but when it's other people's germs, I don't know. But anyways, off topic, I guess. So I took some econ classes in college and realized I liked it. And then I fortuitously got a job as basically an intern for a derivatives trading shop in 2008. And that ended up being a really great place to start because in 2008, a lot of places were laying off workers, obviously, given everything that went on with the global financial crisis. But because we were derivatives traders, we hedged a lot, and volatility was actually really good for that business. And so it actually it opened up doors for me that I not only started as an intern, but then came on as a trader. And I did that for a couple of years. And then I transitioned over to wealth management in 2010. The firm I was at was having some issues, and it seemed clear that like it wasn't going to be a long-term path for me. And so I started looking at other places, and I took a job in wealth management at Merrill Lynch for a very large private wealth team, still doing a lot of trading, but started also looking more from the investment side, what was appropriate for clients. And then from there, I switched teams at Merrill Lynch, and then our team actually picked up and left and went to UBS. And that I think was a really good experience for me because it just opened my eyes to the fact that all of the wirehouses are kind of the same. And so in my head, it was like, oh, well, maybe Merrill Lynch isn't the right place for me. Maybe I should go work at Morgan Stanley or something like that. But when going from Merrill Lynch to UBS, I realized, no, they're all doing the same things. They're just doing it in a different place. So either this is the career for me and I have to find some other way to do it, or I need to find something else entirely. And during that time, I had been studying for my CFA, which I got in 2013. And so once I had the CFA charter, I just thought, okay, well, either I go do what I'm doing on my own, or I go try to work on a portfolio. And I decided to go start my own business. So in 2014, I went on my own. I just thought, okay, I'm going to just do this and see how it goes. And then I really started as more of like, I guess I would call it more of a money manager portfolio style advisory firm rather than what my firm is today. And that quickly became apparent to me that was not what people wanted. What people wanted and needed was financial planning. And yeah, they still need investment management, and that's important, but that's not why people come and find a financial advisor. And so once my eyes were open to that, I went and got the CFP, and then my firm evolved from there. So my CFP I got in 2016, and my firm is now almost 9 years old. And the last 6-7 years have really been like honing the craft of financial planning and changing how we interact with clients to make sure it's very collaborative. And then more recently in 2020, I got my registered life planning designation. And with that, we go through a series of meetings where we cast a really wide net on what's important to clients. We help them prioritize it down and come up with what they really want to work on in the next 18 months to 2 years. And then we help them knock out any obstacles that might get in their way. And then that sets the stage basically for financial planning. So from there, we're able to really get the like light a fire in our clients' bellies, but also just get like hit the ground running, right? Rather than it just being this process where we're trying to get clients to give us stuff and get them excited about doing it. You know, some people are excited from the get-go, but some people need like a little extra push to kind of get them started and get the wheel rolling, right? And so that's what I've found life planning is really helpful for. It gets people who are already interested in working with a financial planner very stoked.
Yeah, I was gonna say I've never actually heard of registered life planner until now. So I think that's a really interesting thing because at the end of the day, when we're looking at our finances, it is planning our life and our future and how the money falls into it. But when we go straight diving into financial planning, sometimes we don't see like the connection between life and finances. We just know we need the money to make life happen. So I think it's
Definitely,
really
yeah.
neat that you have this
Yeah.
registered life planning. And so are a lot of people familiar with it, or are a lot of people like me who are like, oh, actually I haven't heard of it before?
No,
So
most
how's
people
that
are
work?
like you. Yeah, for sure. Most
Okay.
people are like you. And I think also when people come in, they're expecting a certain way of financial planning, you know, like they heard about what financial planning is, or they read some article somewhere or like a blog post about it. And then when they come, they're like, oh, we're going to like talk about our feelings for 6 hours first. And then and then we're going to do financial planning. And for some people, they're like, okay, that sounds great. And other people are like, I don't know if this is for me. I have found that really it is for everybody, right? The depth in which you go into, like how deep people want to go into, like what's important in their life and how they want to match it up with their money is obviously going to be very person dependent. But life planning really is for everybody in one way or another. It's just like making sure that people are prioritizing what's important to them.
Mm-hmm.
And that's really what it's all about. And how deep a client wants to go into that obviously is up to them.
Yeah, no, I like that because I know when I went to a financial advisor for the first time, it really was like he started talking about life insurance. And I'm like, why? Like I'm not dead yet. Like, and even when I do die, I can't use it. Why is that what we're doing first for our financial plan is my end? So I think seeing the whole picture through registered life planning would make sense then as to why you need life insurance or all the different things for it. So
For
you
sure.
have those specialties, but I know we're going to be talking about Bitcoin specifically. And so one thing that I was thinking of is, coming from like Merrill Lynch and things like that, what was that pushback of even talking about Bitcoins? I feel like even saying the word is taboo in certain like banks and things like that.
Oh, definitely. Yeah. I'm like going to get after we have this podcast, they're going to take away my banking, like my bank account, you know? So, it wasn't that big of a leap for me personally. I think obviously like the journey my clients have gone on, depending on how long a client's been with me, has been very different. I've always been sort of Austrian economics interested, libertarian leaning, and I grew up that way. So like my parents were Ross Perot voters, you know, like that kind of a thing. It was so that seemed normal to me, even though like to the average person that's weird, right? And so and that's fine, and I totally get that. But like so that it didn't seem abnormal to me that you would want to have like a lot of gold, you know, like that. That seems kind of normal. Whereas like when you're in the Merrill Lynch's of the world, like that's not really something that people do. They're not talking about, you know, owning gold bars and where you're going to put it and that kind of a thing. So when I first learned about Bitcoin, it was from a libertarian website called Mises Institute. They're still around. They still have a blog. It was like $1 at the time. Bitcoin had gone from like $1 to $2. It was a big deal for like, you know, weirdo libertarians like me. So we were like, oh, that's cool. And somebody wrote an article and I learned about it. And I tried to buy it and I couldn't figure out how to do it. And actually, with my financial services background, it actually made it more difficult because the place that you could go buy it at the time was this company called Mt. Gox, which actually was a place where you would like trade magic cards. That's how it
Oh
started.
God. Okay.
And then they added Bitcoin trading. And so, but you had to send a wire to Japan. And so, as somebody coming from a financial services background, and also we had international clients, like when I looked at those wiring instructions, something seemed off about it. Like it wasn't going into my own account. I didn't like it. I got like really nervous. And so I just dropped it and forgot about it. And then heard about it a couple of years later when my then boyfriend, now husband, we were out and he was talking about it. And I was like, oh, right. I remember that Bitcoin thing, you know?
Mhm.
And so that was 2013 for me when it started to click again. And it was actually a sort of like making headlines and things in the news at that time
Yeah.
because it had like a run up to 250 in the middle of 2013. And then it went all the way to 1,000 at the end of 2013. So like people on Bloomberg were talking about it and stuff. They're like, what's this weird new money, you know? Um, and so when I brought it up, people just thought that I was strange, but they didn't think of it as a threat. I think that the environment is a little more is different now, the way people, or at least the way the banking community views Bitcoin versus back then. Back then, they were like, okay, these ragtag weirdo libertarians, they can have their stupid utopian money. No one's going to buy this. Whereas
It's
now
like
they're like, oh,
NFTs now too.
yeah, the way like Bitcoiners viewed NFT. Yeah, exactly. So, but I would say like the way that it's viewed now is really, okay, it actually could like theoretically be something where people wouldn't want to use dollars and they might want to actually use Bitcoin instead, in which case, yeah, if you're, I think a big critique of Bitcoin actually is that some people view it as they don't want money to be self-sovereign. They actually do think that government should control money. So if you're on the page where you don't think that individuals should control money and that a government should, then it's going to be really hard for that person to have a mindset where they can accept Bitcoin as being something that's worthwhile. Whereas on the other side of that, if you do think that, you know, individuals should be self-sovereign and be able to control their own money, then yeah, then Bitcoin's going to be really exciting.
Yeah. And like, so Bitcoin, so I was actually talking to my husband beforehand, like, I wish when Bitcoin was $1 for $1, we would have all invested in it. And I think that's one thing that, like, for me, it's really hard to comprehend, because $1 in like US dollar is a fraction of a Bitcoin. And so how do people, like, how are you able to help people wrap their head around that when they're like looking at, okay, maybe Bitcoin is an investment option, when they're saying, oh, I'm going to put $1 in, they only get a fraction of a Bitcoin? Because I don't know the exact amount Bitcoin's at right now compared to $1, but I know it's like huge, because my husband works in the IT field and we've had like hackers come in of like, you owe me 3 Bitcoins, and it's like, you know,
$75,000.
Yeah. It's like a ton of money. So how do people wrap their head around that to be even able to make that jump into wanting to invest in Bitcoin, that the connection of them are so different?
So for every Bitcoin that is out there, the Bitcoin could be subdivided by 100 million, and the smallest unit is something that we call a Satoshi. So theoretically, if you're willing to pay the transaction fees, you could buy one Satoshi. It wouldn't be worthwhile to do so because you'd probably pay somewhere between 5 and 15 Satoshis on buying that one Satoshi. So you probably would want to buy more than that just based on that. And also it's so, I don't even know how I would calculate that in my head, but it's less than a penny. So it'd be also difficult to buy less than a penny's worth of Bitcoin. You could probably figure out a way to get it though, I'm sure, like by going on some of these rewards websites, like Lolly comes to mind, where you can actually activate Bitcoin rewards when you go buy something somewhere, and then they would send you Satoshis, and then your hope would be obviously that they would turn it to something that'd be worthwhile. So I actually, the question though that you had was about how people can view this. And I don't know if maybe a lot of your listeners remember this, but a long time ago, when people used to buy shares of stocks, you actually had to buy them in 100 lots. You had to buy 100 shares at a time. And so if you didn't buy 100 shares or some sort of multiple of 100, then you were buying something called a quote unquote odd lot. If you bought an odd lot, you would usually get worse pricing on that odd lot because nobody really wanted to sell you an odd lot, or they didn't have an odd lot to sell. So it'd be like there were liquidity issues with buying and selling odd lots. And so this is probably more prevalent for financial advisors who deal with older generations. Older generations actually have had to adapt to that, where they would say, like, they would look at their portfolio and they would think, why do I have 182 shares of this thing? You know, that doesn't make any sense. Like, why don't I just have around 200? That's what I'm supposed to have. Why do I have an odd lot? And so that's obviously evolved over time, where you can go buy one share of stock, and that's normal now. And people don't even think twice about buying one share of stock and not even thinking about it. There are other companies too that do fractional shares now of stocks as well. So that's becoming more commonplace too, especially with some of these companies that they don't want to do reverse splits or whatever, or a classic split, to make sure that their stock price isn't so high, where you can actually go and buy a fraction of a share through some of these other companies. So Bitcoin to me is similar. I think that it's really easy to look at it and say, oh, I want to buy a whole Bitcoin, but it's not so much about that. It's more about your asset allocation, right? The dollars that you want to put towards something on a percentage basis, rather than it being, you know, getting a whole Bitcoin or whatever it is. I think getting a whole Bitcoin is it's a nice goal that people can work towards, but it's not a requirement in order to get into it.
Awesome. And so I guess let's talk about like getting into the Bitcoin investment side of it. What does that look like? Because, if you're looking to invest in stocks or a portfolio, you typically just go to a financial advisor and give them their stuff, or you go to any of the other places. So what does it look like getting into investing in Bitcoin as a beginner?
Yeah, so I like to think of Bitcoin more as savings than an investment. So Bitcoin is a money. And so when we put money into a savings account, we never say we're investing in a savings account, right? I mean, I guess I've heard some people say that sometimes, but
I got
it's
1 cent back from my savings
yeah,
account this month.
exactly. It's a stretch now to say that I'm investing in a savings account. And so Bitcoin is similar though, right? Like you're literally you're buying money. You're taking money and you're buying money. You're not taking money and going and buying an investment. It's a very different way of looking at what it is that you're purchasing. And so when we think about it in terms of asset allocation, one of the most important factors of how we determine what somebody should have of it in their portfolio is actually based on their understanding of what money is and what Bitcoin as a technology is. So what is money is actually, it's a question that people don't often answer. I think that we take a lot of our knowledge of money for granted because we use it on a regular basis. And so we all think we know what money is. But when we really break down what money actually is, most people don't know.
I was going to say, typically we're just swiping a plastic card and that's what we call money.
Yeah, exactly. And so one of the considerations is that we often think of money as just a medium of exchange, which is what most people use it for. So that's, you're just swiping your card or you're taking cash out of your wallet and you're just going to go buy something with it. And that's just what we use money on a regular basis for. But there's other factors that determine whether or not something is a money. So it has to be a good store of value, and it also has to be a unit of account. We actually don't use the dollar as a store of value anymore. People don't really think about it because they don't worry about, okay, if I put $1 in my bank account, I'm not worried about what it's going to be in like 6 months from now. But a lot of people are worried about what it's going to look like in a year, 5 years, 20 years, 30 years from now, right? That's the whole reason why advisors like me have a profession. We have to take money as quickly as we can and as we earn it and get it invested very quickly on behalf of clients. And clients don't like to do this on their own because they're worried that they're going to make the wrong decision under a short period of time. And it's true because you have to have the wherewithal to know what your asset allocation should be, what within that asset allocation, how you're actually going to invest and so forth. There's a lot of different factors that go into how quickly I can turn my dollars into investment. And the reason why we have to turn dollars quickly into investment is because of inflation. And so that is something that's in our economy by design. There's no part of the US government that's ever going to say, we want negative inflation. They never say they want deflation. They do anything that they can to fight deflation, right? And so by design, your money will always be losing somewhere between 1% and 3% if they're getting the monetary policy right. And in current times, right, we're looking more at like 8, 10, 15% is what the dollar is currently losing. So as a store of value, dollar kind of fails. And then there's also the unit of account. So unit of account, the best way I like to describe this is actually in regards to a ruler. So imagine you're building a house and you have a 12-inch long ruler. And imagine there were, the Federal Rulers Board instead of the Federal Reserve Board. And the Federal Rulers Board decides, you know what? We don't really like the 12-inch ruler anymore. We're going to now use the 14-inch ruler. And so for people who already built their house with the 12-inch ruler, they're fine. Not a big deal. For people who are going to build their house sometime in the future, it's okay. We'll just adjust and we'll use the 14-inch ruler. For people who are in the middle of building their house, right? They've already started building their house with the 12-inch ruler, and now they have to switch to the 14-inch ruler, right? It's pretty problematic when you're talking about it from a quote unquote unit of account, what you're supposed to be doing. And then let's say while you're in the middle of your project, they decide, you know what? We actually made a mistake. We need to correct down to 10 inches instead of 14 so that we can eventually get back to 12, which is where we're supposed to be, right? So I'm using this sort of like a fabricated example here, but I think it sort of puts into perspective what's going on with our money, right? It's that there's a committee, there's a central group of authorities that are basically deciding how many dollars should be circulating the economy at any given period of time. And they have a target, right? Their target is that 12 inches, let's call it. But sometimes they're not exactly sure how to get to 12 inches. So they print to 14 inches and then they have to contract back down and so forth. Or sometimes when they're printing at 14 inches, it's not working. So they go to 16 and 18 and 20, right? And then we see the effects much, much later in the economy. And it does actually affect our unit of account but we're not so aware of it because it's not as simple as looking at a ruler, basically.
Yeah. Seeing like a Tim Burton house in my mind as you're explaining this ruler situation. However, definitely understand like where it's about printing money and how much is really circulating. So the value of your money isn't the same because it's constantly fluctuating.
Mm-hmm. Yeah. And so we use the dollar as our unit of account, obviously, because we don't have any other unit of account to use. But when the unit of account is being changed, it's hard to tell actually what the value of anything is. And so that's why something like Bitcoin, I think, is important for people. There's a static monetary policy, which means that the monetary policy is known throughout any history of Bitcoin. You can always look at it and know exactly how many coins are going to be minted at any given period of time. We know that the last Satoshi will be mined sometime in 2140, in the year 2140. So there's a known monetary policy there that really can't be changed. People have tried to change it. And because it's a decentralized network, they're not able to do so. What it means is that people in the network have to agree that they want to change it. And most people are not going to agree, right, that they want to be devalued. And so therefore, the monetary policy won't change. And so that's something, so on a unit account side, that's really great. And from a store of value perspective, that's really great too, because right now there is inflation in the system as like money is coming into the system from like new Bitcoin being created. But at some point, there won't be any more Bitcoin that are created. And therefore, we know there will only ever be 21 million Bitcoin, in which case using that as a store of value is nice. You can actually compare it to gold where, there's a limited supply of gold, but we don't actually even know what that limited supply is and whether or not we can we'll be able to access it and so forth. So it's an even better store of value than something like gold because we can actually look at it and know what the monetary policy is just by looking at the code. And then from a medium of exchange standpoint, which I think is actually an important point that people don't like to look at, is you actually need something to be a good store of value in order for it to act as a medium of exchange. So in order for you to go swipe your credit card anywhere, the person who you're swiping the credit card, who's taking that transaction, right? If let's say you're going to buy some eggs at the store, they're not going to sell you those eggs if you give them funny money, right? Because that's not a store of value. Even if they could spend funny money somewhere, right? They don't know when they're going to spend it and what it's going to be worth in the future and so forth. And so it's the same thing with the US dollar. Right now, it's fine. People consider the US dollar to be enough of a store of value that by the time somebody gets their payment, they'll be able to either deploy it into some sort of investment or be able to use that dollar later on to go fund whatever it is that's important in their life or their expenses and so forth. But in the meantime, the dollar is going to sit there, right? And it has to be in something that's a store of value. And so anything that is actually a good store of value actually makes a better medium of exchange. And so over time, basically what we expect to happen is that people will converge on a better money over time. And so what Bitcoin, I think, does is it either makes governments act more responsibly because they have competing money, which would be a great outcome, or people move to something like Bitcoin because it is a better money.
Awesome. So a couple questions that come up with this, everything you said, is one, okay, so in 2140, we run out of being able to mine Bitcoins. It's there. So essentially, there's no more Bitcoins to be found. What happens to people that have no Bitcoins? Like, how will they be able to get them? Things like that. So that's my first question. My second question is, okay, so if we move to the currency of Bitcoin, a lot of people, still don't recognize it as much. And so is there like a credit card where you're still able to swipe it to be able to buy stuff? So like, what's that liquidity look like for Bitcoin if you put money there to be able to use that money for stuff that's not just online? So
yeah, sure. So your first question was, what do people do when there's no more Bitcoin being created? Well, it's the same thing that most people are doing now. So most people aren't running a Bitcoin miner. If they want to go acquire Bitcoin, they usually go to an exchange and somebody who's willing to sell it to them. They agree upon a price, right? And they go and buy it. I don't see that going away. Mining is a business and it's not what it used to be. I mean, it used to be 10 years ago, you just plugged, something into your computer and you ran the software and you were mining. Now you need highly specialized computer hardware to do so. And so most people aren't mining because it's expensive it's expensive to do so. And it costs electricity on top of the mining rig that you have to purchase. So most people are in this day and age going to an exchange to go buy it, or, a friend sent them some Bitcoin, or, however people, they got a gift or whatever it is. So I would say that is something that will continue in the future. Even though more Bitcoin won't be created, there will still be Bitcoin in circulation. Another thing would be in the year 2140. I mean, this is looking very, very far in the future. If Bitcoin is something that's being used pretty regularly in the future, then I imagine that people are selling goods and services and would be willing to accept Bitcoin, in which case somebody who didn't have Bitcoin might be able to just, earn Bitcoin by doing something for somebody else who's willing to pay for that service or good. So that would be another way that people could acquire it. Sorry, what was your second question?
The other question was the liquidity of it, because
right, swiping your credit card.
Yeah, they move their money into it. How are they going to get to it? Are they able to use it?
So I think it's really early days still, as far as that being something that people can do now. I mean, there are definitely there are places where you can go, you can search on the internet, or in your local area, what businesses are accepting Bitcoin, in which case you would be able to go there and you'd scan a QR code. You would actually send Bitcoin to that code. Some businesses are even accepting Lightning, which is a layer 2 on top of Bitcoin that allows for instant payments that have nearly free transaction fees, basically. And so that would be another option, that if you had a Lightning wallet and you had money in your Lightning wallet, then you would be able to go to a coffee shop and be able to buy your coffee and walk away with your coffee without waiting 30 minutes for confirmation to make sure that you didn't, in fact, double spend your Bitcoin or walk away with services or goods that you didn't pay for. So I see that evolving over time. I think that right now it's kind of impossible for most people to do that, and there are very few businesses that are still accepting it, where it would be you go to Target and you swipe your credit card today. It'll probably look like that in the future. There are a lot of really smart developers who are working on those things. Who are working on those things now. So I imagine in 30 years from now, if this is a money that people actually want to use, then for sure, all of that stuff, the infrastructure will be in place.
Right. Yeah, I just didn't know, because we've had exchange students, and so they'll come from France and be able to use their credit cards here, and just the internet converts it all for them, through that piece of plastic. So I didn't know. So Bitcoin doesn't have it yet, but they're working on it right now.
Well, so it's a different story, right? So I think it depends on the future that you're looking into. Are you looking at a future where people are now using Bitcoin as their store of value, unit of account, and medium of exchange, all three aspects of it, right? If they are, then they're just using Bitcoin at all time. And it doesn't matter if they're using Bitcoin in the United States, or if they're using Bitcoin in France, or if they're going to Australia. If Bitcoin is widely accepted and that's what they're using as their currency, then they're going to be able to go anywhere and basically spend their Bitcoin as they see fit. If they are somewhere in the middle, like where we are now, where you basically are still using your native fiat currency, which here is the dollar, then you're converting from dollars to Bitcoin. If you already have Bitcoin, then you can just go and spend your Bitcoin wherever you want, where somebody accepts it. But if you don't have any Bitcoin, then you have to go to an exchange, buy the Bitcoin, wait for you to have it, and move it to your wallet. Okay, now scan the QR code, right? There's a much more of a process. There are credit cards out there right now. I can't remember some of the companies off the top of my head, but I think Fold comes to mind. I think they have a credit card where they do some of this stuff for you. But I think that part of their premise is that you actually do have an account that you keep Bitcoin in. And so when you have a spending limit on it based on the amount of money that you have in this Bitcoin that you basically have in an account. Don't quote me on that though, because I don't use it. So I don't want people to be like, I tried Fold and that's not what it is. You're right. It probably isn't what it is. But I do know that there are certain companies like Fold out there that are allowing you to basically use Bitcoin the way you use a credit card.
All right. And so that another question kind of comes of it is crypto wallets. So when you're talking about credit cards, think of your wallet. And, it's a big buzzword, is you need a crypto wallet to have the Bitcoins and the different kinds of currencies and things like that. So how hard is it to get a crypto wallet? Is that something that's easily done? Or what is a crypto wallet, even for some people listening?
Yeah, so there's actually a lot of different wallets. It's not as straightforward of a question as you would think. And so it depends on what kind of wallet you're looking for. So they have something called a hot wallet versus a cold wallet. A hot wallet is going to be like the equivalent of the wallet you keep in your purse or your back pocket, where you have some cash in it. And when you go to the store, you pull out your cash and you go and buy it, or you pull out your credit card and you easily swipe. That would be your Bitcoin hot wallet. There are lots of different wallets that you can download from app stores, or from like the Google Play. I don't know what it's called on Google. I have an iPhone, obviously.
The Play Store.
The Play
Still
Store,
there.
thank you. Or you can go and download an app that basically can act as your Bitcoin wallet. In the meantime, though, let's say the way that you acquired Bitcoin is from an exchange. What you have in an exchange is an account. You don't have a wallet there. The exchange itself is basically holding things in cold storage on your behalf. And hopefully they're not doing it FTX style where they're also stealing it, but it depends on the exchange, obviously. You should use a reputable exchange especially if you're going to keep money on exchange. We generally tell people that they should not keep money on exchange, but let's say for whatever reason you went there, you bought some Bitcoin, you left it on the exchange. What you would want to do is send that money off of the exchange to your wallet. We generally recommend that people just keep a little bit of spending money or something like that on your phone. You don't want to keep all of the Bitcoin that you've ever purchased and want to use as long-term savings on your phone. So from there, you would want to get something called cold storage versus a cold wallet. The best way to do that would be to get a hardware wallet. There are 3 companies out there that come to mind. There's more for sure, but the common ones that people use are Ledger, Trezor, and then Cold Card. Cold Card is definitely the most secure, and I would say the best one to use, but with the caveat that you have to actually have some technical knowledge and be running a Bitcoin node to use it. People should be running Bitcoin nodes. Bitcoin nodes secure the network. It's the reason why it's decentralized. And so if you're getting into Bitcoin, you should at some point look into what a node is and why you should run one. And then from there, you can get a cold card and learn the steps and do all the things. But if that's just above your abilities at the moment, that's okay. There's other companies out there that make it a little bit easier. Trezor is one that I have lots of clients that use all the time. And then from there, within cold storage, you can either have single sig, which is where one Bitcoin hardware wallet is used to sign a Bitcoin transaction, versus multi-sig, where you use multiple hardware wallets to sign a transaction. The reason why you would want to use multi-sig for your cold storage is that it's just more secure. So let's say you do it's called a 2 of 3 setup, which means that you need 2 out of your 3 keys to sign. What happens is that you get 3 hardware wallets, you set up multi-sig. Your Bitcoin is actually on all 3 of them. You can't spend money without using 2 of 3 of those hardware wallets at any time. And so what it adds is like, it removes that single point of failure, and it adds security, because you have to, like, if somebody were to steal one of those, right, then they can't actually get access to your Bitcoin. They have to find another one of those hardware wallets. But what it does do is it obviously adds complexity, because you have to find 3 different locations to store these things. You have seed card backups that you need to also store properly. You have to keep track of all of them. You have to check them periodically to make sure they haven't malfunctioned and so forth. You should be doing that with your single sig anyways. But obviously, when you start adding more and more hardware wallets, it gets more difficult to keep track of. So there are pros and cons to everything. But I would say that it's better to look towards self-custody and how you can do it, rather than shun it and keep money on exchanges. We saw a lot of this last year, where people had money on places like Voyager or FTX or BlockFi or some of these other institutions, and they went under, and they took their Bitcoin with them. And so that's the last thing that we want for people, right? Is that they do the right thing, they go and buy their Bitcoin, and then they leave it there on exchange, and then that Bitcoin seized for one reason or another.
No, that's insane. So real quick, just so we're all clear, when you're saying like these hardware, it's not physical. These are all like in the cloud, in the world.
No, it's not. They're physical hardware wallets.
Oh, okay. Physical.
Yeah.
Okay. So like I could hold it in my hand.
Yeah. I actually usually keep one on my desk. I can hold up, but they kind of look like USB drives, basically.
Okay. And so that's where those things are being stored. What happens if somebody loses it?
So that's why you would want like the multi-sig thing that I was talking about. Because if you do a single sig and you put everything on one hardware wallet and then you lose your hardware wallet, that's it. You lost your Bitcoin. The backup is that there's a seed card that you can create. So basically all these hardware wallets, when you go to set them up, they have you go through a setup process. And part of the setup process is that you have to write down 12 to 24 words that are the identifiers for, it's basically your private key. And so they give you a little card, and you write it down. And while you're setting up the hardware wallet, they make you confirm to make sure you wrote down all the right words and you wrote them in the right order and so forth. And then they're like, okay, your hardware wallet's set up now. You can go on your merry way and put Bitcoin on it. So if you're going to do a single sig setup, what people usually do is that they take the single sig hardware wallet, they store that someplace. They actually back up the seed phrase to steel plate or something like that. So that's fireproof, safe, and so forth. In case there's a fire, it's not going to, like, the words can't melt it. If you have a flood, right, you're not going to be able to read what's on that paper anymore. So at the very least, you should laminate that paper. But really, steel plate is probably the way to go if you're going to do single sig. You store those in 2 separate locations. You would store the hardware wallet in one place, the seed phrase in another place. That way, if you lose the hardware wallet, no big deal. You go find your seed. It's annoying. There's process to do for you to get your Bitcoin back because you don't have the hardware wallet anymore, but you can do it. If you store them together and you're not taking good care of those 12 to 24 words, then yeah, if you lost it, then you lose it and that's it. I tell clients all the time that they should be storing these things separately. It's a different story though with multisig, because if you have multisig, you can store the seed and the hardware wallet together, no problem, because you've got 3 of them. And so you don't want to store like the seed phrase from something else with the seed phrase of a different one, right? Because then obviously if somebody were to steal it, they would have 2 and they would be able to sign for your Bitcoin. But you can store the one for the seed card for the one that you like, that you set up the hardware wallet with it together, and then find another location for the other 2 and so forth. There are also companies out there that help with this. So Unchained Capital comes to mind as a really good place for people to go to. Unchained Capital acts as the 3rd key holder. So if they're a 3rd key holder, they can't sign for your Bitcoin without you, right? Because they need you as the second signer. So they have what they call collaborative custody, which means that they'll help you if you lose a key. They can be the other signer, but they don't actually have custody. They can't walk away with your Bitcoin.
All right, so much to like process and think about. So I'm gonna jump us a different way because I want to make sure we respect your time, and I have a couple more questions here. So one of them is tax. So can Bitcoin be taxed just like regular money tax? How does that look like?
Yeah, so it's going to look much like your investments. If you just buy and hold Bitcoin, it doesn't throw off a cash flow. It's not like you have to pay taxes on dividends like you do with, let's say, if you hold Apple stock or something like that. And because there's no yield or anything being generated like in a bank account, you're not going to pay income taxes on that as well. So if you just buy it and hold it, then you are basically kicking the can down the road as to when you're going to pay taxes on it. Once you sell it though, however, the same rules are going to apply with as far as like short-term or long-term capital gains. So if you sold it before a year, you pay short-term capital gains on it, or losses, right? Obviously, you can also take a loss on it. And same thing with long-term. So if you held it for more than a year and a day, right? A year and a day you sell, then you're long-term capital gains territory. And same thing, right? It could be a long-term capital loss. You can use it just like any other asset to offset gains and losses. That way, like if you took a loss on your Bitcoin, but you had gains somewhere else, you would be able to net those out the same way you do in your tax return for other investments.
All right. And talking about losses there, 2 questions. When I hear Bitcoin, I also think just cryptocurrency in general. However, there's other kinds of coins out there. What are your thoughts on them? And what's the comparison to Bitcoin versus some of the other cryptocurrencies?
Yeah, so Bitcoin is the only cryptocurrency out there with the least uncertain monetary policy. So like we were talking about earlier about what money is, if you're going to switch from fiat currencies, which are widely used, right? Fiat currencies, while they're extremely liquid, they're heavily prevalent, they're easy to use as a medium of exchange at any time, right? They're not the best unit of account or the best store of value, right? And people know that, and therefore that's why financial services have basically proliferated. When you're thinking about Bitcoin, what Bitcoin does is it removes that uncertainty that's present in the system as far as store of value and unit of account are concerned. And so in exchange for that right now, we have a very volatile, like the actual, like the volatility of Bitcoin itself. The price of Bitcoin is extremely volatile. The price, I think, is actually a good indicator. The volatility is a good indicator of the fact that people are being involved in this, right? If we get to a point where there isn't a lot of volatility in Bitcoin, what that means is that we've hit full adoption. People aren't interested in this anymore. And it hit sort of a median price where it's just going to hang out. But in the meantime, there are waves of adoption that are happening that are causing this volatility. And because we are human beings, right, we herd into things and we hurry away from things altogether all the time. That's just how human beings are. And it's amplified because this is a growth currency that's still very new. It's only been around for less than 15 years and so forth. But if we're really looking at the code itself, right, all the other factors aside of the volatility and everything else that people think about Bitcoin, when you're just looking at the code itself is trying to make it be the least uncertain of monies through its monetary policy. And the code itself does the best that it possibly can do to be the simplest of any cryptocurrency code out there. And it's optimizing for security. And so they don't just throw different things on the blockchain for the sake of throwing things on the blockchain. Everything that's there is for the security of Bitcoin and for the stability of Bitcoin. if that's in stark contrast of its competitors. Ethereum comes to mind because it's the next biggest. Ethereum, in order to compete with Bitcoin, does the opposite of that. They put as many things as they can on the blockchain. They're trying to be as innovative as possible rather than as secure as possible. And so in doing so, right, they've created lots of problems in doing so. And so if you're going to use something as a money, right, you want it to be stable and secure and have the least uncertain monetary policy, not, maybe most likely insecure given what's been going on in Ethereum, having lots of innovation on it that is problematic for the code and sometimes causes a lot of bugs. And they've had them through the years where they've had issues and they've had to back out and come back in with the code and so forth. And so Ethereum's not the only one, though. Basically, every other cryptocurrency out there that's created is created to compete with Bitcoin. And when they're competing with Bitcoin, they have to be different than Bitcoin, which means that they're not going to have this like relatively uncertain monetary policy and also be like optimizing for security in the network. They're going to try to do other things to make themselves seem innovative and more important. And when they do that, they crowd the code and they do all sorts of things that cause it to become either more centralized, which then leads to more security problems, or innovative to the point where there's bugs and so forth. So what I would say for most people, if not all people, they should really only be looking at Bitcoin, and all this other stuff is just some noise.
Okay. So do not invest in things that Elon Musk just says invest in right now.
I think on the other side of that is like, I'm not alone in thinking this. So yeah, I might sound like a crazy Bitcoiner or whatever, but Gary Gensler actually has come out. So he's the head of the SEC. He's come out and had a lot of comments, especially after everything that went on with FTX about what is and is not a security. And he has come out and said that basically the SEC does believe that everything other than Bitcoin is a security, that Bitcoin is a commodity. That is a change of what he used to say. He used to actually say that Ethereum was also considered a commodity and or originally was a security and then became a commodity. And now he's actually back on team security. And so what I would say that what that means for people, though, is that if it's being considered a security, it's a centralized authority. If it's a centralized authority, then it's not decentralized, right? Because it's centralized. And if it's not decentralized, then it means that there's a group of people that can make changes to that code that will change the future of what that currency could or could not be worth, right? And so you're in the same situation as you are now with fiat currencies, except the difference is that you have much less liquidity and you have a lot more problems because you're not really sure what it will or won't be worth in the future. So if it's not going to correct what's going on in fiat currencies, then it's not going to be something that is really long-term savings for people. Whether or not these projects end up being something that's like a cool tech project that people can make some money on. I mean, yeah, I'm sure some stuff like that will come out. But to me, that's more like an app you use on your phone, not like a global reserve currency. And so there's a lot more value in something like Bitcoin, even though it's grown from $0 to 25K, right? There's a lot more value and there's a lot more upside in something like Bitcoin because of what it can become rather than these other currencies that, yeah, maybe a small portion of the population will be excited about, NFTs or some other smart contract usage or whatever, but it's not going to be the entire population of the globe, right? When you think about like what is and isn't important for most people. And so, yeah, while there's like, popular apps, it's going to be the same thing in the cryptocurrency world.
Yeah, and it really resonated with you said people hurry in and hurry out. And so on some of those other currencies that come in, they're there for a moment in time, basically, and they may sit there forever, but nobody's really messing with them after that short brief time. So if anybody's listening to this that is like, I've never thought of Bitcoins before, and maybe I do want to invest in that. So tell us how they can work with you and what that looks like, especially around like this Bitcoin investment side of it.
Yeah, so there aren't very many of us who are Bitcoin friendly out there. We actually have a website. We're called the Bitcoin Financial Advisors Network. You can go to bitcoinfinancialadvisorsnetwork.com. And I think there's like 7 of us on there. And so it's a small group of people who are willing to say, okay, Bitcoin should be part of your financial plan. In my firm, for most people, what that means is that it's a, somewhere between 1 to 10% allocation of net worth based on risk tolerance, understanding of the technology, time horizon, other factors that go into that for sure, unique needs and liquidity and everything else that we discuss when we look at an asset allocation. That doesn't mean though that we stop there. It kind of depends on the client and what the client needs. In my practice, we have anywhere from a 0% allocation. There were some people who didn't want it to we have people who have come in with 100% allocations to Bitcoin. And so the difference I would say between a firm like mine and all the firms that are going to be on the Bitcoin Financial Advisors Network is that if you come in saying you own Bitcoin, we're not going to tell you immediately to sell it. We're going to include it as part of your financial plan. If you're a person who you've had conversations with your advisor about Bitcoin and they keep telling you that, you can't invest in what you don't understand, that kind of a thing, the Warren Buffett saying, or, it's stupid, why are you looking at that? Or just not answering your questions, right? You might not even want to invest in it, but you might not be getting your questions answered properly. Then you're probably in the wrong place as far as an advisor is concerned. I hate to say it like that, but some advisors they're just not very empathetic towards the needs of other clients if they don't fall into the needs of what the advisor thinks that client should have. And so it's kind of, it's client specific. Obviously, for some people that might mean that it's fine, right? If the advisor's needs are similar, or what the advisor thinks the client's needs are actually similar to what the client's needs are, then it's going to work. If the client's needs change, right, and the advisor can't change with it, then you have a problem. And so we also see people who maybe don't have any Bitcoin coming in this way just because they have questions and they want to have them answered properly. And then from there, they can make a decision about whether or not they want to go buy Bitcoin and save in Bitcoin. I would say that the Bitcoin Financial Advisors Network is a great place to start if somebody is looking for that. My firm is a fee-only practice that's been around for 9 years now. And we also do life planning. So that's something to consider. There's only 2 life planners on that website. And so if you want life planning, then there's slim pickings there. If you don't really care about life planning, then obviously, there's going to be other people out there for you. We are all great friends too on that website. So we're just happy that people are getting the services that they need, whether it's me or somebody else on there.
All right, awesome. And we'll make sure to put it in the show notes, that website, as well as your direct website. And also for anybody listening that wants to learn more about Bitcoin, I will make sure to have her podcast on here so you can go and listen to the Bitcoin for Advisors, as well as your other podcasts, so that anybody can listen in and just get all that information before maybe they're ready to pull that trigger or anything like that. So I have all those things on there. Is there anything about Bitcoin that maybe I haven't asked that I should have asked for anyone listening?
Yeah, so I would say that there are a lot of other good resources as well. Bitcoin for Advisors, the podcast, is there so that people can actually learn about it. And my husband and I, we go in depth on a lot of different topics within Bitcoin to make sure that people understand what they are. There are other really great resources out there. There are plenty of books on Bitcoin. One of my favorites is called The Bitcoin Standard by Saifedean Ammous. I would absolutely check that out if it's a really great starting place for people who are unsure about what this is and why people are so crazy about it. And it really does delve into a lot of the what is money subjects that we talked about on this podcast, much more in detail, obviously, because it's a book. And he has great examples and charts and all sorts of things in there that I think can really help people. If you're looking for more of an investment perspective, my colleague Andy Edstrom wrote a book called Why Buy Bitcoin. That's another good one that I would say also does go into what is money. It's kind of hard to get out of the what is money thing because it's like that's the starting place, right? If you're going to save in a new currency, then you have to understand why it is that you're saving in that currency. So I would say that those are 2 really good resources and will open up a lot of doors for people. And obviously, like the more you study Bitcoin, the more you realize you have questions about Bitcoin. And so there's a lot of really great people out there who are putting out really good content all the time. And it's just finding the right people, unfortunately, because this is something I brought up on other podcasts, but it's a lot easier to make money off of these other cryptocurrencies because you can just issue a coin. And if you do the right marketing and you sell the right story, then people are going to pay for that coin, basically. And in doing so, right, it's a classic pump and dump where, people get in and they use that money for something and then it doesn't actually come to fruition. But people are walking away with other people's money. And it's a really sad cycle that has happened over and over and over again. I've been in Bitcoin now for 10 years. And people were doing this in 2013. They're doing it in 2017. They're doing it now. They're doing it in spite of everything that went on last year and in 2021 of companies going out of business. It doesn't seem to be going away. And so because of that, though, there's a lot of money sloshing around the system in cryptocurrencies, not in Bitcoin, who take a lot of airtime, or who can get articles printed or who pay for things at conferences, right? And so the word is getting out a lot more about why these other cryptocurrencies are the future and why Bitcoin is old, slow, and in the past, because, it's 15 years old. It can't possibly be what everybody thinks, what any Bitcoiner thinks it's going to be, or it's the MySpace. It's not the Facebook, right? Or it's the Napster, whatever, they want to call it. But it's just simply not true. And so it's really important to sort of to filter through all that noise that's out there in the crypto world and try to find truth in what actually is important when it comes to holding Bitcoin versus other currencies.
All right, awesome. Well, we'll make sure to have that website in the show notes. So anyone listening that wants to dive deeper, we'll make sure to put the books in there that Morgan mentioned as well. And thank you so much, Morgan, for sharing so much information about Bitcoin and the different strategies and what is money. So thank you for joining me and sharing all that with me.
Yeah, thanks for having me on here. It was a pleasure.
Thank you for joining us this week on the Virtual U.S. Financial Advisor podcast. Subscribe to the show on Apple Podcasts, Spotify, Stitcher, or via RSS so you'll never miss an episode. We'd love a rating on iTunes, or better yet, tell a friend about the show, which will help us grow as well. If you want to learn from any of our financial advisors, head over to our website, virtualusfinancialadvisor.com, to learn more about each financial advisor and connect with them personally. Be sure to tune in next week to get more advice from the expert financial advisors. See you on the next episode.